With food inflation leaning at a tipping point of 23% amidst the recent 18.17% inflation figure released by the Nigerian Bureau of Statistics, tougher times now await Nigerians. According to reports, the prices of food have increased in an upward trajectory as the masses battle low purchasing power. Hence, many households whose earnings and wages have been cut down by inflationary trends cannot afford to stock, even as some had to find alternative sources of foods in junks. Aside the spike in food items, there has been an uptick in cost of paramedical services, vehicle spare parts, dental services, motor cars, maintenance and repairs of personal transport equipment, personal grooming establishment. As the spike in food prices continues, experts say the present economic situation in the country is a threat to consumption, household businesses, and of course, investors. Well, to put more life into this, of course, to discuss, as I said earlier, Chief Executive Officer of Cowrie Assets Management Limited, Mr. Johnson Chukwu, joins us via Skype from Lagos. Good afternoon and Eid Mubarak to you, sir.
Good afternoon to you, and thank you for having me. Baraka de Salah to Nigerians.
All right, but we have Nigerians. Well, a tuber of yam for 7-8 years and last week is now 1,000. Bag of rice is about 26,000. They say it was about 24,000 before now. Palm oil, 2,800 naira for 4 liters. Is even more expensive than fuel, and now it's about 4,000. Were you expecting this hike in the price of food across board, Mr. Chukwu?
Well, actually, what I would say is that the trend has been consistent. It didn't come as a surprise, because if you look at the inflationary trend in the past 2 or 3 years, you will observe in the past 2 years, you see consistent upward trend in the consumer price index. But most importantly, the food index is the way the problem is. We've seen food inflation, like you rightly pointed out, move to 22.95%. The previous year, the month of February, was just 21.79%. When I say just, that would tell you that the increase was more than 100 basis points in just a single month. And those increases are what you are talking about when you talk of the increase in the individual food items. If you take, for instance, the bag of rice you just mentioned, the 50 kg bag of rice is trading at about 13,000 naira per 50 kg. And that is about the minimum wage today. So it then means an average household of 6, that is a husband and wife and 4 children, will basically spend all the salaries of the father, if your father is the only one working, on just buying a bag of rice. And the same applies to other food items. You just mentioned the price of a tuber of yam. Same cost across things like potato, other cereals, bread. You mentioned oil, palm oil, and what have you. So the key challenge is that we've seen consistently the price of food items increase because the farmers who produce food items have been displaced, and the displacement seems to be increasing. Previously, it was limited to northeast. It gradually got to north central through header settlers crisis, and now we're talking of bandits in the northwest, and then we have iPod or whatever, what have you in the southeast. So, and they kidnapping in the south and southwest. So, as long as you have this displacement of farmers, you're going to see further increase in food prices, and which is impacting on overall consumer price index.
Now, will they say this is a threat to consumption? Of course, households, businesses, and investors. It seems it's already looking that way with all you highlighted. Your first response.
Well, it's not just a threat to consumption; it's a threat to household well-being and the stability of the society. Because when you have severe malnutrition as a result of families not able to afford to put 3 square meals on their table, it could have social impacts, like people going into crime, engaging in nefarious activities, and then you see worsening standard of living, which is what we have been witnessing over a period of time. And all these things have impact on well-being of children. If children are not well fed, their intellectual capacity, the development of intellectual capacity will be weakened. You're going to have children who are malnourished, who do not have the capacity to absorb instructions in schools, or who may actually be withdrawn from schools. And then you find a population that are not well trained to face the future. And of course, those dislocations can be permanent or long term, in an economy, social and economic impact could actually be medium to long term.
So what if some also say the weakening value of the naira and of course hiking transportation is also another problem?
Yes, absolutely. The pass-through effect of depreciation of the naira or devaluation of the naira has direct impact on what you call imported food items or food imported inflation. You did mention some items beyond food items. You mentioned items like vehicle spare parts and some of those imported items. Remember that when they are imported, the importers have to pay current exchange rate to bring those goods in, and they have to price them according to the exchange rate they pay to get those goods in. If you look at the exchange rate today, you have of the multiple exchange rates, the importers actually access more than 90% of their import from the parallel market. And that means that the importation of goods are priced at the range of 480 naira per dollar. And that will be passed through to the average consumers in terms of the shop floor of these goods that are imported. So when you have depreciation of your currency, it has a direct impact on the inflationary rate. And then you mentioned the issue of cost of transportation. If you look at the major haulage vehicles are trucks that use diesel as their food, as their feedstock or their source of fuel. You observe the price of diesel has gone more than 250 naira per liter, and those who are, they have to build that into the cost of transportation. Those who are hiring them to transport their goods will also build them into the final cost of the goods they are moving around the country. So if you have an increase in cost of transportation, if you have a depreciation of your currency, they would certainly have a pass-through effect on your consumer price index, which are the totality of what we're witnessing, which led to consumer price index moving to 18.17% in the month of April. Of course, by Monday, we'll have the figure for April, and those figures are expected to increase further.
Some say key inflation drivers are basically the supply side issues. I don't know if you agree to that. And do you see it beyond what monetary policy control can handle, what the monetary policy committee can handle?
Well, the impact of monetary policies on inflationary pressure that are structurally driven will be very limited. It is not driven by excess liquidity. Of course, we know the central bank embarked on expansionary monetary policies to mitigate the effects of COVID-19 last year, and those pressures are still there. But of course, we also know that central bank is gradually reversing that. We've seen an uptick in short-term monetary policy, money market rates. We've seen T-bills, this is 4-day bills at 9.75%. But that's, like I said, inflation is not driven largely by money supply. So if it's not driven by money supply, there is a limit to the use of monetary policy tools to claw back inflation. Because what you want to do is introduce a contractionary monetary policy, which could not only fail to fight inflation, but could also lead to contraction in economic activities. And we're just coming out of a recession. Economy grew by only 0.11% in the last quarter of 2020, which is a very fragile growth. So if you apply the brakes and adopt contractionary monetary policies, instead of even fighting inflation, you're going to fight an economic recovery, and that will worsen matters. So I think the key thing is to address the structural challenges we have in the economy, address the issue of insecurity so that farmers can go back to the farms. And you did mention that is it a supply side driven inflationary pressure? Yes, because we're not producing enough food items, we're not producing enough goods and services. So what you have is that we are scrambling for the few quantity of goods and services already available to feed the large population of 200 million people. And people are pricing up those goods so that they can get enough to feed their families. Other factors you have to bear in mind is that the restrictions on accessing FX is also having an impact. If you look at, for instance, the food inflationary pressure, you look at items like wheat, which is one of the cereals. You know the central bank is already considering putting a restriction on accessing foreign exchange for the importation of wheat and sugar, to add that to the 44 items that are already restricted. If you do that, you're going to see further uptick in the price of wheat, which will have a direct impact on the price of bread, which is a major staple in Nigerian households. So that will further worsen food inflation and worsen overall the inflationary pressure.
Now, staying with your submission on the restriction of FX, we've also seen that arguments from farmers when policies like this come from the CBN, they tend to support it. But one other question that people ask is, how self-sufficient are we in most of these sectors before we outrightly restrict Forex from importing some of this farm produce that we try to restrict? Are we not supposed to get to a point before we totally restrict FX for something like sugar and wheat?
Yes, my take on it is that we should have a phased restriction, just like we did in the case of cement, where as local production increases, the tariff on the importation of these items will keep increasing, so as to discourage importation or to discriminate in terms of costs, landing costs of imported items in favor of local production. That should be the appropriate approach as far as I'm concerned. But as it stands today, we have not achieved self-sufficiency in the production of most food items that we consume. Not only that, like I mentioned earlier, we're also seeing a worsening or reduction in the production of those items that we even have competitive advantage to produce. Items like tuber. I mean, yam it's almost, apart from countries like Brazil or North America, where South America, where you produce yam, Africa is one of the major local natural habitat for yam production. But we're seeing a reduction in production because people have been displaced in places like Benue State, Plateau State, Kogi State, major food belts of the country, in the course of fight between herders and settlers. So if we don't address that, even the phased restriction of importation of some of these items will not solve any problem, because we are seeing a situation whereby local production is gradually, consistently declining.
Can government pursue price stabilization at this time? Maybe that will help stimulate growth in the agri sector. Is that possible?
It's always a tough thing to adopt price stabilization, because what you want to do is adopt price control. And you know, the common logic is that if you try to control the price of goods that you don't have enough supply, or control the price of goods where there's demand for it but there's not enough supply for it, that good will go into the black market, into the parallel market, where equilibrium price will be determined, where supply and demand will meet themselves. And you actually end up taxing or imposing taxes on your citizens, because the citizens have to go to a parallel market and buy at a higher price they would have bought if the market is an open market. So price control can only be effective if there is enough supply. The key thing is to drive supply. As we said, we're facing inflationary pressure driven by supply shortfalls, which on its own was driven by dislocation of farmers or insecurity in the country. Let's address the core of the problem, which is the issue of insecurity. If we address the issue of insecurity, people will go back to their farms. I understand people in places like Zamfara State pay taxes to bandits to be able to access their farms. So those taxes will be, at the minimum, be built into the cost of the goods they produce from the farms. But in a lot of instances, they don't even have access to those farms, because they could be kidnapped, they could be killed in their farms, and for that reason, they are not going to the farm. They are living in an IDP camp. And as long as they remain in the IDP camp, they now become refugees, internal refugees. We have to feed them instead of them feeding the country. So we need to address that core fundamental problem that we are facing, which is the root cause of the consistent increase in food prices that is driving overall all-item inflation.
I know you're not a security expert, but let me throw that to you. We've seen governors of southern states, we've seen security agencies all meeting, discussing security, insecurity, that you've also says is a way to address some of these challenges, and I totally agree with you. All of these moves, how well do you think we are doing? Just your view, at this time, everyone has something to say with regards to security in Nigeria.
What I would say is that we are in a crisis situation. Virtually all the 6 regions of the country are facing severe security threats. So it is expected that anybody who is in leadership position, particularly at the political level, should preoccupy him or herself with finding solutions to the security challenges, which is obviously what the southern governors are trying to do. I also believe that their counterparts in the north are also pursuing the same thing, just as the presidency and National Assembly have been focusing on discussing how to arrest the deteriorating security situation in the country. If you listen to major headlines, 99% of major headlines in the country today are discussions of security issues. We are working towards a tipping point, and all of us should be worried. Everybody should put hands on deck to address this issue, because if you don't address the issue of security in the country, every other bet will be off. You can't actually talk of economic recovery. You can't talk of economic reconstruction or growth. You can't talk of infrastructure development if people can't go to the infrastructural contract they have won to execute those contracts. So I think it has become an issue that all of us are discussing. All of us should be looking for solutions to it. I do not think we found the solutions, because we're still witnessing deteriorations. Hopefully, as it has become a critical priority for everybody, we're going to find the solutions in the shortest possible time. Otherwise, we could actually find ourselves as a country in a very difficult situation.
With this, we are at 18.17%, last inflation figures, and by Monday, we expect the figures to come in. Any projections? What are you thinking?
Well, you don't need to be an economist to project that we're going to see further increase in inflation.
Of course.
The level of dislocation we saw in March has actually worsened in April. If you go to the southeast, almost all the states in the south have been attacked. The south states have been attacked as well. So even if we don't do anything, I don't know where the inflation rate will get to, but we're certainly going to see a 20-something inflation rate, all-in inflation rate of more than 20% in the near future, not necessarily in the month of April, but certainly we're going to see an inflation above 18.17% in April, and we're also going to see a food inflation that will go above 22.95% that we saw in March.
So what will be in the front burner when the MPC guys want to discuss? What do you think will be in the table for them to, focus on?
The key thing is that they are in a big dilemma, and I think they are going to veer towards intervening or speaking on the structural issues. They really can't afford to tighten, though we've seen an increase in interest rates in the money market space, but they can't afford to tighten at a time when we are seeing dislocation of production activities, and that will worsen our current economic situation. I think their priority will be how to maintain some level of balance between the pressures to bring the inflation rate and the pressures to stimulate economic growth.
Mr. Johnson Chukwu, CEO, Carry Assets Management Limited, thank you very much for your time. I really appreciate this, and enjoy the rest of your day and the Ramadan celebrations.
Thank you for having me.